82% of middle income households have cut the amount of money that they are saving and are now tapping into their savings. Credit card debt is one of the highest levels that it's ever been. With all of these indicators impacting a recession, how do you see that for crypto?
I do very much believe that current actions taken by regulators will likely make the United States lose crypto.
Tell me what some of the projects that you're actually very bullish on right now that have maybe just entered your radar or are growing more fond on your radar.
I haven't shared this story a lot of times, but I actually wrote a letter to LPs that I never sent where I was going to shut down the fund. I even had Simon, our lawyer, draft up a fund closing document, right?
What?
Welcome back, ladies and gentlemen. We are here inside the war room with myself, Felix Hartmann, the managing partner of Hartmann Capital, and no other than Dan Jablonski, our head of investor relations here at Hartmann Capital. Super excited to be back. It's our 6th episode. We've gotten incredible feedback so far from all of you. And today's going to be a packed session. There's a lot that's been happening in the world of macro. Of course, crypto there's been a lot going on from a regulatory standpoint. We'll dive into that. Everything from Kraken, Silvergate, Paxos, and more, and the opportunities we're seeing. And then, of course, also do a little bit of a deep dive and a refresher of what's going on inside the world of the metaverse as we're continuing to deploy every single month into this space that we're really, really bullish on. And finally, give some updates from the firm, because it's a special time of the month for us at Hartmann Capital because we just turned 5 years old. And so with that, handing it over to Dan.
Yeah, and it's been a few weeks since we've done one of these, Felix. So welcome back.
Thank you, sir.
It's good to be here. I don't know if you mentioned, today is Tuesday, February 14th. It's Valentine's Day. It's also 7 p.m.
Glad to be here with you.
So yeah, thanks for being my Valentine today. We're going to timestamp this one, important thing. It's also episode 6 that we've done now. And so I know we've covered a lot in the first 5 episodes, and I want to start today's episode with more of a story. And because we just hit this 5 years, I want you to tell us some of the lessons that you've learned along the way, because 5 years is a long time. And so tell us some of the things that you've learned, and start us off with some cool stories about the past 5 years for Hartmann Capital.
For sure, we love that. And I think the way I've framed all these is that I'm trying to maybe share some stories of from the past that are also relevant today as to what we're experiencing right now. And so I think each of them has a lesson. So the first one I would like to share is a lesson of conviction, okay? Because ultimately, this market has been through incredible crashes many, many times. In fact, I think Bitcoin itself has been drawn down by 80% more than by 4 times. This time was 75%. So you could wrap them together and say Bitcoin's been down 75% plus 5 times already.
Super volatile.
And so the one time when I experienced it as an asset manager was in 2018, where in November 2018, I remember it was my brother's wedding. And
This is right after you just started, because you started in February of 2018.
Yeah, February was when we launched the firm, and then when we launched the fund in June. And so, when I first incorporated, Bitcoin was still north of 10,000. It was at 14,000, 15,000. And then in November 2018, I remember I was on the golf cart driving to the place where my brother was about to get married, and my phone started buzzing like crazy. Are you seeing this? What's going on with Bitcoin? Are you paying attention? And I'm like, what's going on? I checked the charts. I'm like, holy shit, Bitcoin was flatlining at 6K for the span of a year, right? Every time 6K bottom, 6K bottom. Mike Novogratz was like, we're going to the moon. This is the bottom off here. And we did the opposite, of course, where Bitcoin went from 6K to 3K in the span of 2 days. And funny enough, and I haven't shared this story a lot of times, but I actually wrote a letter to LPs that I never sent where I was going to shut down the fund. I even had Simon, our lawyer, draft up a fund closing document, right?
What?
Because I was like, damn, our AUM got decimated. This was after one of the most brutal bear markets, from 20K down to 6K, we just went down another 50%. Oh. And so I was like, it's going to take forever for the market to recover. But then I slept over it, and it was, again, the term conviction, right? That's the lesson where I said, look, I believe in this technology. I believe in this asset class more than anything else. And I think that's the last thing you can hang on to, where you say, look, if the price might disagree, right? The market might disagree. But as long as it's a conviction can be a dangerous thing, right?
Sure.
Blind conviction in something just because you like and you want it to happen, that can backfire, right? But if you say look, I have enough data points that I say, look, there is traction in this industry. This is a real technology. I've personally experienced the benefits. I see other people experiencing the benefits. I see progress. I see more and more developers joining this industry. that sometimes can be the only thing that keeps you in business. Because everybody, like, I remember when I first launched, there was some research site and they said, like, we were one of the first 100 crypto hedge funds. By the summer, there was 1,000. And then by winter, by like January, there was like 20 left. And I mean, if you can go today to like Crypto Fund Research or Galaxy Vision Track and go look how many 2018 vintage funds are left or prior. Virtually none. I mean, there's like a handful. Like I would say now we're sub 10 that are as old as us or less. And so that's number
crazy.
one. Conviction, because when everything goes against you, you got to find, you got to really go in there and ask yourself, like, why am I in this? And sometimes you might realize, look, you know what? Maybe it was just the money. Maybe there was nothing there. But in my case, I was like, the thing that drew me into this industry was the tech. And that did not get disproven no matter the price action. And so I stuck around.
Yeah, and also, like, what did you have to lose at that point in time as well, too?
Well, I a lot, actually, because we were at the point where the operating expenses were so high percentage-wise compared to the AUM that I had to make the tough decision and actually said, I'm going to bear them myself. Most GPs don't do that. So I said, you know what? I'm going to be the one that pays for the next audit. I'm going to be the one that pays for the admin for the next, I think, year and a half or so. Like I absorbed personally, like when I was already really, really down, I personally absorbed like somewhere to the tune of like, 6 figures worth of operational costs that I shouldn't have needed to cover, right? And so I was willing to say like, look, I might go to 0 or below 0 personally to give this another shot. And so I decided to give it another shot. And I mean, in this case, it worked out and here we are.
Get it off the ground.
But there's, to make a decision like that, to say like, let me give this another year to take a huge financial risk, you got to have conviction.
Yeah. So tell me what happened after November 2018. What's lesson number 2?
Lesson number 2 is humility, actually.
Okay.
And another way to frame it is that models can break.
Okay.
And so that lesson is partially through me, but also partially through competitors, where in COVID crash 2020, right? So like this is when Black Thursday, March 12th, President Trump at the time just announced closing borders to Europe. And that night I was up at like 4 a.m. in the morning at my desk and I watched as, Bitcoin went like down $100 a minute for like 20 minutes in a row. And the irony was there was this magical support line, the 200 weekly moving average that in history never got broken until that point, right? And I was like, wow, that's an incredible time to buy, right? And so like I would add more and more and more. And at that time, like, we still had fairly lax leverage rules and I would like even buy more on leverage. And of course, Bitcoin ended up going as low as $3,000. And so whatever I had in that leverage account, got wiped out. Now, the good news is that I still had some limits in terms of like how much I used. There's other funds, one famous one was Adaptive Capital, where from what I understand from talking to other managers, their model essentially was that like you buy every dip, the more dips, you buy more even, leverage. And then as it goes up some, like you unwind it again and so forth. Jeez. They end up buying all the way down to 0 essentially, and they got liquidated. Again, that's what I've learned from other managers or LPs with them. That's roughly the story. And the interesting thing about Adaptive is that their either CTO, their main analyst was Willy Woo, who was like the most famous on-chain analyst in crypto. He goes back like, I don't know, like 8 years in Bitcoin or something like that. So like, true legend that people look up to. But I'm like, wow. Even the guy that invented like so many on-chain analytics models and whatnot could blow up his fund. And what's the lesson here? Models can break. Humility, right? Like you can have the most amazing back-tested model, right? That works 100% of the time. Well, it's worked 100% of the time until now.
Until it doesn't.
Right? There can always be a change in the data set. There can always be some other event that makes it break. Where, for example, like, yes, for the last 10 years, we've never broken 200 weekly MA. Well, COVID, we broke through it. And then even more so last year, we not only cleanly broke through it, we've been trading below the 200 weekly for the longest time now, in 2022. And so you can have the best model, but you still have to manage risk on that, right? Which is also where, for example, we have stricter leverage rules that they came from. And of course, conviction even played in there because COVID was just as bad, when Bitcoin went back to 3K. And I said, look, if we ever needed Bitcoin, it's now more than ever.
Did you draft another letter to shut down the fund?
No, not that time. No. I've only done it once.
But you were like in a good. I'm asking because like you were in a good spot.
In a better spot back then. We had a really incredible January. January 2020 was our best performing month ever. We did like 95%. And so wow. So that was like we started on a really high note, which made March less painful. Still somewhat painful, but. And definitely wasn't going to shut down there, but I did at least set myself another deadline where I was like, dude, you've just been through like 2.5 years of this. Like at some point you got to make money, right? So I was like, you got to hit X amount of AUM by the end of the year.
Well, I was going to say, and things started to recover slowly over the summer and then in the fall. Tell me what happened in the fall of 2020.
Yeah. So in the fall of 2020, this is actually very reminiscent of what's happening right now. And so the main lesson to take away from this is to focus on high time frames, right? So like, low time frames is like you're living on the 1 minute chart, the 5 minute chart, and so forth.
For sure.
And it can drive you crazy. High time frames meaning you really zoom out. You focus on the years. You focus on the quarters and so forth.
Yeah.
And Q3 2020 was one of the most panic-stricken quarters I've lived through, because in hindsight, you're like, what happened in Q3 2020? Like, it seems like such a boring old time, right?
Wasn't that when the crypto market caught a bid in Q3 of 2020?
Towards the end and really Q4 2020,
Okay.
right? So this was like right before or just right as Michael Saylor for the first time entered crypto, right? But what happened in 2020, there was like in October 2020, I remember October was a special month where like 3 different things happened. One, you had BitMEX, where the DOJ broke into their New York office, I think arrested the CFO. Back then, Arthur Hayes, the founder, was still kind of like international, like, and I think in Seychelles and whatnot on the run, and ultimately got caught too. He got arrested. I think now he lives with a foot tracker in Miami,
Somewhere.
But ultimately, BitMEX at the time was still the biggest exchange. Like that was the biggest perpetual futures exchange in crypto.
Yeah, huge.
And today, it's not even top 5 anymore, right? It's really like fallen off. But so you had like, wow, the biggest perp exchange had an incident with the DOJ where the DOJ raided their offices.
Yeah.
Then you had the founder, the CEO of OKX, getting arrested by the CCP, and he just vanished for 2 weeks. For 2 weeks, you didn't hear from him, but the irony was that the exchange kept going. So you're like, that's kind of strange. Founder gets arrested and just vanishes. No word from him, from anybody. It's like people were like, back then they were speculating, did he get killed? Like, what's going on? Is the Chinese government overtaking OKX? What's going right?
Yeah.
And so that was a big scare. And then the third big scare that happened was Donald Trump, at the time still president, back for those who remember, like Trump was like crazy Twitterer before he got kicked off Twitter, right?
Yeah.
Where like he would make these random tweets and the market would just like jolt around all over the place.
Yeah.
And one day he made a tweet about that he doesn't like crypto, and all of a sudden, crypto did another crazy letdown. And so like it was so hard to trade because you're like, we're about to break out. There's all this good stuff lining up. You've got DeFi new innovations. You have Saylor, the first publicly traded companies buying Bitcoin, like all these good things where like a bull market should be coming.
Yeah.
But then as momentum is building up, it's like slap in the face.
Yeah.
Trump hates it, goes down, right? Or slap in the face, biggest futures exchange gets raided by the DOJ. Or boom, one of the biggest Chinese exchanges, like his founder gets arrested. Like it seemed like all the odds were stacked against crypto, which feels a lot like right now.
I was going to say, you said it feels just like right now. And that's something that we'll talk about a little bit later on in today's episode. But yeah, it draws uncanny parallels to the two.
For sure. And so that's why I said, like, if you really lived in a moment, you're like, oh my God, this going on there, this going on there, this going there. If you zoom out, you step back, you realize, focus on high time frames. Like how much, let's say BitMEX broke a lot of rules. Arthur said a lot of stupid stuff. Like there's in the court documents, it came out that Arthur once said like, oh, you know why I love the Seychelles? Because for the cost of a coconut, you can bribe the government officials, right? And it's like, look, should people that say those things run the biggest exchanges? Probably not, right? You can disagree with regulators, you can still respect them, right? And same thing, with a lot of the other things where Trump said a lot of crazy things. Doesn't mean that the crypto's bigger than any president, period, right?
Sure.
So like high time frames, that was the main lesson for that one.
Number 4.
Trusting your gut. And the lesson there is like, if it feels off, it's probably off. And there's 2 instances.
Okay.
One is Terra. So Terra was one of our biggest positions in 2021.
Okay.
I was very bullish on it.
So now we're going back into the bull market.
Yeah, so now we're forward in like 2021.
Near zero interest rates. This is the full head-on crypto bull market.
Right. And I remember going to the Terra event during Messari Mainnet of 2021. And this was the first time I met Doe in person. I met Matt for the first time in person. And something was so off, and I even talked about this afterwards, where I was like, you know what, I love Terra. We've got massive bags in Terra. But the one thing that was off was that every project that was launching on Terra had these presentations, except the presentations looked more like gameplay trailers, where there was like these 3D animations of starships and this and that. like so little substance. It all felt like so fluffy, and yeah. It was hilarious.
Really?
And then to make things worse, all the leaders, Doe, Matt, and so forth, everybody was pretty hammered. Like everybody was like kind of drunk, and Doe made so many stupid jokes and comments. Were like, this is like, I get it. Like it's a bull market. We're all making money. We're happy, and like everything is a good mood, and it's chill, it's personal. But like I'm getting MLM vibes here.
Oof.
Where it seemed so little substance, so much hype, where I was like, I kind of want to start like unloading. We're also getting close towards the end of the year, and I was like, if we sell now, we're gonna get massive tax bill. And so thank God I waited till January, and then in January we unwound. And so like the great news is that not only was one of the best trades, we exited at the top, but also we were able to defer our massive tax bill from Luna into 2022, which then counterbalanced with the losses. But number one was like, trusting my gut. That time I did.
Yeah.
Second time around was Solana, where I think it was Bitcoin Miami. This is like in April, before the market had major drawdowns, before Celsius, before 3 Arrows, and so forth.
This is in April of 2022.
Correct.
Yeah, so
correct.
Last year.
And
almost 1 year.
Solana hosted a 3-day music festival during Bitcoin Miami with like Chris Lake playing and all kinds of artists.
A 3-day music festival?
3-day music festival.
That sounds like Fire Festival.
And the irony was I literally made an Instagram story where I said short everything, because I was like, this is just so much excess.
It sounds just like Fire Festival.
Except that time I didn't trust my gut, where I was like, don't fight the bull market. Or I was like, shorting you crazy. Like everything is, it's a new paradigm and everything, right? Like we're in a post-value world. Like NFTs are now worth like $3 million. Like
in April.
This is April, right before everything went down. And so in reality, like gladly I trust my gut on Luna.
Yeah.
But even with Solana, this is like Solana like $200, $250. And I was like, that is a bubble. The way they're spending money is not smart. They're wasting money. They're being stupid, right? And now fast forward after FTX, Solana was down to $8.
Yeah.
$8, right? Of course, it recovered quite a bit. But even, I don't know what it is now. I'm assuming it's somewhere around the $20 mark. Even then, that's down 90%, right? So
21.72.
21, right? Yeah. And just for reference, their 3-day music festival, April puts them roughly at still 120. Right, so even at 120, there's a long way down.
I just want to say that I do love Chris Lake, so at least they had good taste in their music festival.
That's good to hear. Yeah. I mean, at least the money went somewhere, right? So that was number 4. And then the last one, number 5, is scaling. That's more from like as a business builder, right? I mean, because sometimes people don't see that. They think, running a fund is really just the investment side, but there's also a huge business aspect to it, which is like, finding the right talent, right? There's the endless side of things, there's the capital raising side of things, there's the investor relations side of things, there's the operations, the regulatory, the filing, the compliance. There's so many aspects to it, and media, everything, right? Mm-hmm. And so when I first started, it was a one-man show where like I was everything. I did the accounting, I did the compliance, I did the regulatory funds, I did the analysis, I did the trading, literally everything, right?
Of course.
And eventually, like I had to get comfortable. Like there's so many phases where like you start with that, first get into the financial position where you're able to hire, and then you have to get past your superhero syndrome, where like it's a mix of finding the right people that you're comfortable letting go to, and then getting to letting go, where you say like, I'm going to trust this person through or run this aspect.
Sure.
And then comes also the part where I'm like, hey, for the first time you're managing a team, we had massive turnover in 2021 because like crypto was so fast paced. I wasn't able to build close relationships with the team members because we went from like a one-man show to I think like 10 people in like 12 months, something like that, where I was like, all these people like I had to recruit and find and then build relationships with, train, and like all these kind of things. Tough, right? And so then we went from that to like I think back down to like a core team of like 3 or 4. Like this is like by like February of 2022, we were back down to like myself, Daniel, JP, and Jonas, right? Yeah. And then it was a rebuilding phase where we started like hiring again, and now we've been finally coming to the point where we are like slowly but consciously growing, whereas like the people we hire, they stay, right? Like we brought you on in May, you've been around. We just brought on Amanda, and so like really strategically piece by piece we're adding now people. And also initially I really thought like the only business in running a firm is the investment side. Now I realized, my most valuable skill is the investment side. So now I'm hiring everything outside of investments to bring myself back into the investment side. So like I'd rather bring on somebody in operations than bring on an analyst. Why? Because why should I be doing operations work when I can do 10 times the analyst
That
work.
of an analyst, exactly.
And so it's all that, from
that.
finding the conviction during the tough times to, having the humility to know like you can be wrong, and not just you can be wrong, you will be wrong. You can be on your best streak, and having the humility to say like, look, I'm out of it, cutting yourself off, right?
Yeah.
Focusing on high time frames. Like there will be choppy things, not letting it get too much to your head, but really then zooming back, stepping back and saying, look, what's the big picture here? Why are we even running a crypto fund, right? And I think this is a question a lot of people can ask themselves in times like this. Like, what's still in here for crypto? And you realize, you know what? There are some fundamental truths that are still supporting this asset class. There is real value in having a decentralized stablecoin. There is real value in being able to lend and borrow in a decentralized fashion. There's real value in having a decentralized store value, right?
Yep.
So if we get back to the basics, then you realize, okay, all the hype doesn't matter. The crashes don't matter. The regulatory action matters less, right? All these kind of things bring back, kind of like shine a light of like, okay, what's tangibly true here?
Yeah. I love that. Thank you for sharing that. Seriously, thank you. That's awesome. Those are great lessons. I think you can apply those to just about anything in life as well too. So there's quite a few takeaways there. Now I want to transition back into our bread and butter part of the show. So when we last did one of these in the first week of January, we talked about a relief rally fueled by short squeezes.
Yep.
We hit the nail on the head. And so there's been a total return to form for the hedge fund. We were up around 50% to end January, all attributed to this short squeeze rally and a changing of really like broader risk sentiment. And so I don't know if there's anything that you want to touch upon there, but what's happened now in the 14 days between where we're at today and the end of the month has really been a lot of range-bound whipsaw action in the market. And I know that's kind of what we're more so going to touch upon. But where is your head at today? Just open us off.
And
here.
so it kind of ties back in some of these lessons. I'll say like we had an incredible start to January, and I would say the last 30 days have been tough to trade. Because you find yourself caught in this transitionary period where on one hand you're thinking, first, man, this is a bull trap, right? And so then all of a sudden you go in cash or you want to go short, and then all of a sudden market pushes higher. FOMC happens. Powell sounds pretty dovish, right? And so then you go long. And then all of a sudden, market starts tanking again. ETH dropped back below 1,500.
In my opinion, on February 1st, we had the most clarity that we've seen on the macro front in like 1 year, based upon both the 25 bips, the decelerating inflation leading to a 25 basis point hike, which is kind of a tapering of the hiking cycle, as well as his speech. His whole speech was very, very dovish. And so I really thought like we had a lot of clarity, and that totally bounced back in like the next 2 weeks, where we got a 517,000 jobs added in January. The labor market's hot. 52-year low unemployment rate at 3.4%. Today, February 14th, CPI came in hot today, bouncing off of January. Continue.
No, so here's the thing.
Sorry, I totally got you off there.
No. So even though, right, so like to tie back in the lesson, right, like even though like the short term seems very confusing, I just taken a stance and say, okay, look, it's way too easy to lose a lot of money in these ranges. Like trying to say like, okay, are we going to go back down to 1,400? Are we going to go higher to 2,000, right? If you zoom out and say, look, I think in the big picture, there's enough important things that happen, right? Number one, like you said, macro's cooling off, right? It's becoming better. Like jobs look strong. Interest rates are getting, like the hikes becoming smaller. Inflation for I think the 8th month in a row is has gone lower,
Since
right?
June. Yep.
And so that's bullish because ultimately people want to front run the interest rate cuts that ultimately will happen, the easing.
100%.
Now, Powell said like it's not going to happen this year. We were on a call with a potential investor this morning. They said a lot of institutional clients expect it to happen as soon as like June. I don't know about that, but like still, there's the market believes that easing is on the menu again.
The market believes that. It's tough with some of the macro indicators that we've been getting over the last 14 days.
Right.
Yeah.
So I would say like if I had to like draw this pro-con chart, like on the pro side, I say like macro environment is improving, right? You have more innovations happening, and we can talk about this later, like from like new L1s like Canto to new NFT marketplace like Blur. Like there's new innovations happening, so that's bullish too. Now on the counter side, you have this swath of like regulatory action from like countless 3-letter agencies that make you more concerned. But here's the truth. as bad as these regulatory actions can be for the crypto market, let's say over the next 6 months, and I would expect a lot of volatility there, like, they'll make an announcement, things will drop. Maybe idiosyncratically, maybe, for example, after the crack announcement, decentralized staking went through the roof, right? But I would say once all that is over, that is net bullish for the crypto market. Why? Because we needed regulatory clarity. And unfortunately, regulators are going through regulation by enforcement. But even through regulation by enforcement, it makes people clean up their act. And because we clean up the act, now we become more investable. And so once that regulatory clarity is there, once that phase is over, then I think the market is truly ready for a bull market. And so I don't, even as an asset manager, I think people expect you to have a crystal ball. Like, I do not have a crystal ball for, let's say, the next 3 months, the next 6 months in terms of like, which company is going to get hit, what's going to happen, like day to day, what word is going to come out of, Jerome Powell's mouth. And the funny thing is, the market doesn't even know. Because when you see FOMC meetings happen, or the CPI print this morning, you had CPI this morning, wick down, rally up, drops lower, rally up, right? FOMC, same thing, Jerome Powell speaks, market pumps like crazy. It gives everything back and more, and then starts rising again.
The Bloomberg chart on the S&P 500 today was wild. I haven't seen that in weeks. It rained
right. And so what you're looking at really is the market in real time figuring out what this information means, right? And so I'm not going to pretend that I can not just interpret it correctly real time, but even more so foresee what Jerome Powell is saying. And so I'm saying, look, I don't need to. That's a beautiful thing. I don't need to. Instead, I say, look, over the next 12 months, over the next 18 months, this is the most likely end game, right? Let me optimize for this. And the beauty is, because of the bear market, a lot of these tokens are incredibly oversold, where you're able to get valuations that are literally 95% down from where they were at the highs.
Right. We will get to token valuations in 1 second. A few other points that I wanted to mention on just the pure macro front, and then we'll kind of relate that into more crypto-focused things. 82% of middle-income households have cut the amount of money that they are saving and are now tapping into their savings, another catalyst for future interest rate decreases. Second, real hourly earnings from today's CPI print fell 1.8% year over year. So that means that inflation is going up, people are making less money, going down. Brutal. Another catalyst for future interest rate decreases. Credit card debt to savings rate ratio is one of the highest levels that it's ever been. The yield curve has been inverted since July. This is a future indicator that Treasury investors are pricing in future decline in interest rates. With all of these indicators impacting a recession, how do you see that for crypto?
Right. So I get asked actually quite a lot where people say, like, look, there's all these reasons why we're going to hit a recession. And the funny thing is, we have been in a recession if the government hadn't changed the definition of a recession, right? I mean, anybody who takes a Series 7 exam, or most financial exams, they ask you, the definition of a recession is 2 consecutive quarters of GDP contraction. We already had that like a year ago, right? So if we didn't change the definitions, we've been in a recession for quite a while. And the reality is that a recession is actually most likely beneficial for markets from the angle that if we go into recession, the government will be more likely forced to do easing again, right? So one of our analysts, Jonas, he laid out like 4 different scenarios with 2 different variables, right? The variables like, we are in a recession or not in a recession, we have high inflation or we don't have high inflation, right? And so he said the worst outcome is actually high inflation and no recession. For markets, the worst. For markets, the worst. Why? Because that means we need to keep hiking rates. And they can, because clearly it's not hurting the economy yet. And so we'll keep going higher and higher and higher and higher.
And that's kind of what we're seeing with a really high jobs report and also really high inflation numbers still.
Right, because they know, like, look, economy's strong. We can afford it, right? Because the Fed really has 2 jobs, which is ensuring price stability and ensuring a strong labor market. As long as the labor market is strong, they've got one priority, which is price stability. So they'll keep hiking, right? But once we start seeing weakness in jobs, right, they're like, okay, now we've got to balance 2. Maybe we'll stop with the hikes, right? And so you've got, recession and high inflation. Well, now they need to start easing. If you have no inflation and recession, well, then they'll ease a lot, right? And so that's probably like the most bullish for the market. And then you have like no recession, no recession, no inflation. That also is bullish for markets. So the only negative outcome for markets essentially is no recession, high inflation. And so as weird as it sounds, it's probably good for markets if a recession happens, because it will force the Fed to ease up on what they're doing, to probably provide more stimulus. Like all the people that have high credit card debt and no savings, they will get helicopter money again, right? Yeah. It's going to be questionable for the strength of the US dollar and for a lot of currencies.
For sure.
But ultimately, asset prices will benefit in a time like that.
And so that means right now we are in a transitionary phase and a transitionary period of this market. Do you agree?
Yeah, I think the Fed is down to like the last 6 to 8 months where they can even continue to tighten before the whole system faces like actual systemic issues. Because if you have mass defaults on credit card debt, if you have, it's going to trickle down into so many when people can't make their mortgage payments anymore, when people can't make their car payments anymore, and so forth. And I think we're getting pretty close just based on the data.
Yeah, and we're going to see more layoffs. There's still more layoffs to come. I mean, right now we've only really seen layoffs across big tech. But what happens when other sectors and pieces of industry within the economy start laying off their workers as well too? So I definitely, that's one of the scenarios. An impending recession is one of the scenarios that we could see.
And just to clarify, like if recession is awful, it's going to hurt a lot of people. A lot of people are going to lose money. This is really more commentary on how it would impact markets, right? So definitely not celebrating a recession, but in terms of like how it will impact assets, I think it is mostly going to be actually bullish.
And then so this two-sided sword, right? This weird dichotomy that we're in currently has another side where, just as you talked about, regulators are going after crypto. And one of the big things that happened this past week was Kraken. And Kraken settled with the SEC over their staking program. And so this has kind of sparked a different debate on both sides. Do you want to mention anything about Kraken at all? About your view?
Yeah, I mean, look, it's tricky. I think the way to understand regulators is, one, they were a bit asleep at the wheel last year. I mean, they let probably half a dozen billion-dollar plus collapses happen last year, which
hurt a lot of retail investors.
Hurts a lot of retail investors.
Their number one
job. And so now
they've
realized, look, we got to take some action. Right. At the same time, they got to go after targets that are within the jurisdiction. And so, for example, do I think that there's worse actors than Kraken out there? 100%. Of course. For all intents and purposes, I would say Kraken, that's my opinion, has been one of the most compliant, cleanest players out there. Have they probably done some stuff wrong? Sure. So in this case, they didn't have the right disclosures. They didn't file all the right paperwork, apparently.
According to the SEC, they had commingled some customer tokens. They were using words like return and yield. They had 100% of the discretion over the amount of rewards distributed. They were using different payout schedules and the protocols offered for staking themselves.
And so could it have done better? Sure. It sounds like Coinbase has been doing it much cleaner and better, where, for example, your assets, if you're staying with Coinbase, they actually stay in a wallet that you can track. It's done to Coinbase Prime, which is an SOC1 and SOC2 compliant custodian, right? And all the rewards go to them. They have a predefined fee, which I think is like 10%, right? And so there were some mistakes. Now, is this like Sam Bankman-Fried level fraud? Absolutely not, right? Could it have led to some, disconnect between what people thought they were getting and what they ultimately got? Yes. Right. And so like they came after that. And now the tricky part is that they've carte blanche shut down Kraken staking department. And so that's not something where I think the better approach would have been to be like, listen, you're breaking these rules. Here's how you fix it. Fix it, right? Because Kraken has been around, I think, since 2013, right? They even have a banking license in Wyoming, right? Like they're trying to make things work, right? They decided not to offer perps. They decided not to offer options, and they've just offered things that they can legally offer, right? And so I think cutting some slack and saying, look, here's how you can become a good player is a better approach than saying you can't do it. Because guess what people do now? They're going to go to some other offshore exchange that will offer them staking, because U.S. customers, they want to get the yield. Like why? Like you're disadvantaged by not getting it, right? And so we got to find some middle ground. But it seems like, again, we can want what we want, but like it seems like currently regulators are out to give, punitive damages, right? They're going to find people that didn't follow the rules.
Agreed.
And, but I think ultimately, long term, while we might disagree with the approach, it probably leads to cleaner markets.
So tying this in now, we have this dichotomy of macro overhang and really uncertainty across so many of risk assets, but also now tied with the uncertainty in crypto markets and regulators cracking down. Is this the perfect storm? Is this the perfect bottom that we're kind of maybe seeing right now for a time to maybe take more of a long stance or a thematic bucket approach to the portfolio?
So it's tricky. I will say I think it is. Then I think the next 6 months are the perfect time to, and of course, as always, not financial advice, like there's always risk.
Yeah.
But I think the next 6 months are a great time to start building up your position that you want for the next few years, right? So like in time frame where I said like next 6 months, great time. I 100% think there's going to be volatility.
Yeah.
And I think there will be individual projects that will die due to regulation, right? And so like I don't know where that falls yet, but I think, for example, one clear target are stable coins, right? So like there's definitely regulators are very much interested in getting control over how stable coins are run, right? And that can be a centralized stablecoin, right? Right now, who is it? Is it SEC or DOJ? I think it's SEC, right? With Paxos? Yeah. Right, SEC is like going after Paxos, which is the company behind Binance USD, right? But at the same time, you also have decentralized stablecoins, like Frax and whatnot, right? And I've got no insight into any of those two, but from a perspective that I know something you don't, but I very much think it's possible that there will be surprises where one day government says, you know what, you cannot offer a decentralized stablecoin, right? Maybe motivated by UST from Luna, right? Where entire projects get shut down and like essentially killed by regulation or killed by legal costs, right? So I'm personally shying away a little bit from most application layer projects because they have a bigger Achilles heel than really clear-cut commodity style layer one protocol where there is regulatory clarity on what this is viewed as. And also they are not directly offering financial services, right? So for example, every lending market has the risk of them saying, oh, you offer yields, just like Kraken. What are your disclosures, right? There's more margin of error once you get into the financialization where say, hey, lending market, oof, they might get in trouble. Stablecoins, oof, they might get in trouble, right? But when you get to base level layer one that might, generate some revenues from NFTs, some revenue from DeFi, some revenue from Metaverse, some revenue from like web services and so forth, right? There is a bit more defensibility. And so as much as I'm not a huge fan of the layer one thesis, I think you can take a step back and say, look, over the next 10 years, will a blockchain be mainstream? I very confidently I would argue yes. If there is a mainstream blockchain that supports the transactions of either DeFi, NFT, stable coins, web service and so forth, right? Just one category. Can that itself be worth $1 trillion plus? Yes. In my eyes, it absolutely would, right? Because it's a foundational layer of the internet, right? And so now any player, I mean, even Ethereum would go up multiples to reach that number, right? But then you go a step lower and say, look, do any other players have a shot? Whether that is a Cosmos and so forth. Like Cosmos, I think is like an FT for like 3 billion, 4 billion, right? That are insane multiples if over 10 years, again, high time frame, right? Like fund is only 5 years old, but I'm saying like 10 years, that means like 2 times more than what we've gone through, right?
For sure.
But that's still worth a fighting, right? That's still worth, a return pursuing. That's a return worth waiting for, right? That's a return worth building position over, right? And could this absolutely fail and never happen? Sure. But I think the likelihood and the multiple are aligned enough where that's a bet worth taking. And so, I'm fully behind crypto, and I think the layer one thesis is probably the safest bet right now, and so we're exploring that.
Tell me what some of the projects that you're actually very bullish on right now that have maybe just entered your radar or are growing more fond on your radar.
So a number of them I can't talk about yet because we haven't fully built a position, but something we're paying attention to is layer ones that are more international. Because like if I say, look, the US government agencies, they're doing what they're doing. Do I agree with them? No, but Doesn't matter.
Yeah.
So what can you do? Go elsewhere. And the unfortunate truth, and I'm an immigrant, and this is very, very hard for me to say, is like, look, I came to this country and I love the United States, and I think it's the greatest country in the world, but I do very much believe that current actions taken by regulators will likely make the United States lose crypto.
Yeah.
Crypto's not losing. The United States is losing. Because look, crypto just goes elsewhere. And the reality is this war's already been lost, right?
Yeah.
Why? Because like 90% of trading volumes happen outside the United States.
Offshore.
So yeah, and I mean, that means if you'd say like, if regulators get on the wrong side of some protocols, they might say, you know what? We actually do not need you. We will go offshore, right? And so my part of the thesis here is that go back projects that don't have to have that headache in the first place.
Yeah.
Go back projects that are based in other countries, right? Like Asia, for example, right? So like I'm very much paying attention to Asia right now. Progressive Asia, that is less so China, right?
Yeah.
And I think that's an interesting angle. One other project that we already did build position, so full disclosure, we have a position that I can talk about is Canto. So Canto is interesting. It's a new layer 1 that is EVM compatible, so Ethereum virtual machine, meaning you can use the same coding language they use for Ethereum, which is Solidity, and you can access through the same wallets that you access Ethereum through, for example, MetaMask.
Yeah.
But at the same time, it's built on Cosmos, so it inherits the consensus layer and the inter-blockchain communication from the Cosmos ecosystem, which makes it very interesting.
Yeah.
And what's cool about Canto is a couple things. I would say 3. One, it's attracted a lot of Ethereum developers. So for the first time, we're seeing a lot of the ETH devs start messing around with it, building on it, expanding on it, right? So for example, Jared Cray, the head chef from Sushi, has been talking very positive about Canto. I think Sushi is actually exploring building on Canto as well. You had the founder, Scott Lewis, the founder of DeFi Polls, start building actively on Canto, and several others. And on top of that, you've got 2 interesting technical innovations that Canto brings. So one of the first innovations of Canto is that it actually takes part of the gas fees from the protocol and redistributes them to what they call public goods, right? And so there was a great write-up that I read that talked about how during the gold rush, like California, I believe, had the same population as Kansas, right? And everybody came to California for the gold rush. Now, what Cali did right was they implemented, I think, a gas tax of something like 2%, and they used that money that the gold rush people would pay to actually improve the infrastructure of California. And then California became thriving beyond the gold rush, right?
Yeah.
And so they said, what, the same problem kind of exists with blockchain, where you had all this activity in the bull market, but then there's so little left afterwards.
Yeah.
What if some of these gas fees that we all paid didn't just go to miners, but instead they went to support public goods?
Yeah.
And so, for example, Canto said, look, there's 3 public goods, a DEX, a lending market, and a reserve asset, or like, a stable coin.
Yeah.
So they have their own stable coin called Node, right? And the portion of the gas fees are now going to support these, which means you can have a trading fee-free decentralized exchange. And again, usually we'd say like anything that's free, it's got to come from somewhere. Well, here it's obvious. It comes from the gas fees, right? And Ethereum, for example, I think makes something to the tune of like $5.5 billion in profit a year, right? So if some of that would, for example, let's say go to a properly decentralized Uniswap that is not, because Uniswap is not fully decentralized. I mean, there's Uniswap Labs, a private entity, right? And currently Uniswap does not earn anything, right? So instead you'd say, you know what? And funny enough, A16Z owns such a massive amount that Uniswap wanted to expand to Binance Smart Chain.
Right.
And I think A16Z made up like 30% of the entire voter turnout, right? And was able to veto it, you know? And so again, how decentralized is that? Well, now with Canto, again, there's a public goods DEX, right? A public goods lending market. So that's really interesting. The second level that's really interesting is that they have something called CSR, where a blockchain developer no longer needs to launch a token to earn money. Instead, they say, you know what? Let me create a cool feature. Let me create a cool platform, right? Let's say decentralized options or decentralized perpetual futures, or maybe some add-on feature to a DEX, and like anything that they want to innovate, right? In the past, how do you make money with that? Because ultimately every dev needs to get paid, right? The service got to get paid somehow, right? And they would launch token, and all of a sudden you end up, you go CoinGecko, you get 20,000 tokens. Do we need 20,000 tokens? No. Will most of them ever make money? No. Does it introduce even more concerns about regulatory clarity? Yes. Now, what Canto introduces is that a developer can actually earn a portion of the gas fees that are earned through using the contract, right? And how is it earned? By people using it, right? So you build something that's useful. You build something that people actually come and spend gas fees on, right? and you get rewarded.
Yeah.
And it's hard to hack that because ultimately people have to spend money on the gas, right? It's like they're willing to spend real world value, and then you get a portion of that.
Yeah.
And what it allows is, one, incentivizing developers and not needing tokens. And so I think that can tap into a whole world of devs that believe in blockchain as technology, but they don't like the whole crypto aspect. And boom, now you're able to, innovate without needing tokens. And so I think that's really interesting. And so from a pure comms perspective, it's like 500 million FDV maybe. Most layer ones that have gotten some traction, they're in the billions.
Yeah.
Where I say, look, it's a unique enough concept. I'm willing to take a small bet on it, and it could become a winner in the bull market. And most winning layer ones, they end up in the, not 10 figures, they end up in the 11 figures, right? And so then you've got a nice return where, again, I say, like, look, zooming out, I don't know what Cantor will do for the next 3 months. The market decides. It always does, right?
Yeah.
But if I zoom out and say, look, over 8 to 24 months, I wouldn't be shocked if it puts in a rally like Luna or Solana or Avex did in 2021. And so that's a horse I want in the race. And that's kind of, I think, how I approach the market right now, where I say, look, who knows what the next 3 to 6 months bear? But I want to spend this time selecting my horses, so to say, that for all the different major theses that can play out, I can be a beneficiary from them as well. And you do that while the market is slow, while the market is undecided. You don't do that once they start running, because once they start running, you're probably too late.
I want to transition now into the Metaverse Fund and some of the things that we've been focusing on over the last month and a half on the VC side. So a few big highlights. Red Pill. We spent pretty much the entire month of January heads down running an SPV for Red Pill. They have successfully raised $2.5 million to enable their future of virtual events. They hosted a mixed reality Grammys after party with Paul Oakenfold.
Yep.
They also hosted a
attended
party
there.
that you were at. They're closing in on cloud rendering, which is huge. They're a partner of Vinova. And what else have they been up to over the past 2 months?
Yeah, I mean, that's really been the core focus. Now that we finally have the funding secured, and raising 2.5 million in this market is really meaningful.
Yeah.
Now we got a full year of runway ahead of ourselves. There will be a second tranche to that raise later in the summer, and at that point we already have the first versions of cloud rendering done. So that will enable us to raise that remainder, and we'll probably we're continuing the SPV. So if there's anybody that still wants to join, we can. So as part of the raise, I also got a board seat with Red Pill, and so we really have 5 core goals for the next 12 months or so for this year, which is one. Enabling stability, so that, for example, if somebody, if you're hosting an event, let's say with EDC or Ultra and so forth, that you can have a full, 3-hour event without any hiccups, without any technical issues and so forth. So they're putting a lot of stress tests, pressure tests, and so forth, that the technology can hold up even for large events. Which the second one is which is scale, right? How many users can the platform handle at one point? How many per shard? How many shards at the same time, right? So we want to get to the point where we can have 10,000 concurrent users at the same time, right? Where we're testing the scale now, so that when we have a big event, I think the first big event coming up in April or May with major A-list artists, that the tech is ready. The third aspect is cloud rendering, right? Because one of the big TAM issues is that right now you need a gaming computer to be able to access Red Pill. But with cloud rendering, anybody with a headset is able to get into that virtual world. The fourth is an editor build. So essentially that no longer it's just the Red Pill team building these virtual concert venues, but anybody who's an Unreal developer can build their own concert venue. And the fifth point is projects that validate it. So essentially we'll want to find some major events, both major events and also small, but many of them are smaller events that can prove the concept, right? Where we have our first concert, maybe with 10,000 people attending, maybe a bedroom DJ, maybe a virtual influencer. We want to try all these different verticals and really prove the concept this year, but both revenue generating and also getting real people in there to provide real feedback and so forth. And so that way, by the end of the year, we'll have scale, we have cloud rendering, we've got our proof of concept, and then then the real scale starts. Yeah,
which will help with a lot of business development and marketing for them as well too. Very quickly, in staying in this pattern, tell me about Subpack. What has Subpack been up to over the last 2 months?
Yep, so Subpack is another one of our portfolio companies. Also got 2.5 million financing, so they too got an extension to their runway, which is great. They are in the space of tactile audio immersion. And so they've got really 2 core angles to the business, which is one, their wearables, right? And the nice thing is for years, I think something like to the tune of 2 years, they've been working on their X1, which is the 3rd generation wearable. They finally, especially with this funding now, they're getting the first sample of their new wearable, the X1, in March. And then, if everything works, they're ready for production, I think sometime in April or May, which will enable a new line of revenue, and also, of course, create a lot of new buzz, because their last version was already a huge success, where like even, Coldplay, for example, brings the Subpack wearables to every show so that the people that are hard of hearing can experience it.
That's amazing.
Or even like everywhere in the Red Pill office, you've got the Subpacks, because if you're attending a virtual concert, it's so much better when you can feel the sound.
100%. No, that's amazing. That's an incredible metaverse technology.
And the second angle that they're building out is, they're getting the technologies more integrated into other things, and the core line of business is cars. So, they already have, I don't know if I'm allowed to mention the specific brands, but there's one major car brand they've already integrated with, where there's, I think, 3 different models of their cars that it will be launching with Subpack in their car seats this year. I think even like Q2 already. And then there's 2 other major car brands that are very, very close to like signing deals with Subpack, where then I was going to say like every other car is going to have Subpack in the car seats, just like you have, Bose or Harman in different cars, right?
Yeah.
So that's going to be really exciting, especially that's going to be a revenue driver for them.
That's going to be an awesome experience. Staying with this pattern, and you had mentioned as well too, this is a terrible environment for raising capital. Really, really hard. And over the last 30 days, our portfolio companies have raised in excess of 15 million in new capital. I know we can't necessarily like publicly mention all of those or a lot of those, but just to throw some numbers at you, tell me about some of the runways that our portfolio companies have now as a result of these raises.
Yeah, no, I mean, and this is a huge topic for VCs, and I think one that most are very quiet about, probably because the numbers are bad.
Yeah.
Because the reality is, if you launched a crypto VC fund, or I mean, most VC funds, high tech, in 2020, 2021, the reality is most companies raise 1 to 2 years of runway, which means if you did 2020 or 2021, they are out now. And I mean, I get those emails. I get those emails from other VCs that are like, oh, you should take a look at this company. I'm like, I've heard of this company like 5 times this week. I have a feeling, they're probably running out of money, right?
Yeah.
And the beautiful thing is that 25% of our companies have over 3 years in runway, meaning it's 2023 now. Yeah. They're going to have money issues in 2026 if they don't raise another dollar.
If they do not raise another dollar.
And who knows, the world will be in a very, very different place by 2026.
And the companies will grow a lot in 3 years as well, too.
By 2026, we're going to have like the Oculus Quest 5, you know? So we're going to have the PlayStation VR 4.
Apple will already be on their 3rd headset.
Right.
Like we'll be using it every day.
It's going to be very different.
Pure productivity tool.
So that makes me very happy, and especially because there's also like some of our strongest companies where I know, like, look, if they have 3 years of runway, in fact, they should probably accelerate instead of making it 3, make it 2, make it 2.5, and
increase the burn.
Grow, grow in these phases, So that's exciting. Another 50% of our additional 50, so that brings us to 75. 50% have over a year in runway, right? And so that only leaves, and 1 year is great too, because that means they can work throughout all this year and then worry about capital raising towards the end of the year, maybe in 2024, right? Or maybe even like late 2024. And so that's also very, confidence inspiring, because that means by that point, easing might have already started, right?
Correct.
A lot of the new VCs will have raised their money, right? And competitors will have died out, right? So this is a really great setup. And then there's only 25% of companies that have less than a year, and 25% means 3 that are currently raising, right?
Yeah.
And so like they're actually actively raising, and so they're all like in a very good financial position.
2 more companies I want to talk about. I'll take the first one. I'll let you take the second one. My boys over in London, Cathedral Studios. They've announced several significant partnerships, and they've established quite a few different brand name level enterprise partnerships over the last few months. They got a grant from Amazon for Amazon Web Services. They have a $700,000 Immutable X development grant for the Immutable Web3 gaming platform. They've been accepted into NVIDIA's Inception startup program. They've been enrolled in the Microsoft Azure startup program. So Amazon, Microsoft, NVIDIA, they have a spot on the Epic Games storefront. Yep. Huge. And Swissborg and Builder Capital just joined as new investors there as well too. And then last one, can you tell me about what DressX has been up to over the past few months?
Yeah, and before going to DressX, Cathedrals they've been on an absolute rampage, which is amazing, because we backed them at an $8 million val back in January or February of last year, and now they're already raising at 25. So like this is a company that actually like tripled in value, in the span of one of the worst years.
Oh yeah.
And they're in incubators with every big tech company out there essentially. They're getting on one of the best game launchers. They got on-chain support with IMX. They're doing AI now as well, where they build their own open AI integrations, where like literally they build their own APIs where they can create like weapon skins using AI. You know, they're creating
assets.
Yeah, texture and everything. So super incredible team. Really proud of them because I've watched them from like the beginning. We were the first investor dollar they've ever received, and so that's been a fun journey.
It's been a good one.
Now, DressX, of course, the ladies at DressX, we've had them on the podcast recently. Daria and Natalia, they're always crushing it. What they did recently is a couple of things. One, they were listed as one of the top 100 innovators in Web3 and tech from Vogue. Yeah. So Vogue Business nominated them one of the top 100. Warner Music became one of the investors, but also they're starting to do collaboration where there's much media about this online of how they want to use DressX for, you know, digital fashion for the artists, right? Yeah. So that's a huge, you know, strategic collaboration and investor. Yeah. And then third, they launched a new collection on Roblox. So, you know, by now, for those that don't know, DressX is the #1 digital fashion startup in the world. They've got their assets listed on Meta Avatar Store. There's filters on Snapchat. They've got 2 collections on Roblox by now. They're doing it in Web3 with Decentraland. They're doing it with Ready Player Me. I mean, they're everywhere. Wow. And so really, really proud with that progress. And I'm sure there's going to be more announcements on that one soon as well.
To end today's episode, to end our time together today, I want to spend just a few minutes talking about a huge firm announcement. we just made a hire.
Yeah, our 7th full-time team member.
Yeah. Tell me about her.
Yep, it's our first. Well, now as of the current collection, our first her. Yeah. Amanda DeCoste. She's been an EA to CEOs 3 times. Most recently, she served as the EA to Michael Moore from Genesis for 3 years. Yeah,
she was one of the first pioneering like core team members of Genesis.
Yep. So when she joined, I think the team was like 30, 35, and by the time Michael resigned, the team was like over 200. So she's seen the progression of a crypto trading firm from like not super young, but still earlier stages to becoming a multi-billion-dollar, behemoth. Yeah. And of course, she left long before the collapse. But it's just a very valuable insights because I've gotten to the point, and as I mentioned earlier, with scale at the very beginning, the realization I had is like I've always, for the first 4 years, I've been hiring like analysts, researchers, traders, and so forth. And then I'm the one that never talks to them. Why? Because I'm spending all day long doing operations. I'm spending all day long on investor calls. Now, it's not because I'm full of myself, but it's just because I want to spend my time better. I let you take most investor calls where I say, look,
I crush those, by the way.
Oh yeah, you do well. but there's you have to prioritize where it's not like, look, I'm not above talking to potential prospects, but like, let's focus the time I spend talking to prospects to like when it's really nitty gritty that you can't find in the docs, that you can't answer yourself and so forth.
100%.
And so I'd rather become more of a hermit where I say, look, I've got people for raising money. I've got people for investor relations. I've got people for operations. And now Amanda's coming in to like kind of be the glue that kind of puts all these things together where optimizing me more, optimizing the firm more, working with all the different team members.
And just like an example of each of the team members or myself or Amanda, you hire people for what they really enjoy to do as well too, and what they're good at and where they can provide value. As this is just another example of that.
Yeah, and also like, as I mentioned in the beginning, one of my issues in the bull market was turnover, right? Because as I said, growing so fast, going from 1 to 10 leads to a certain disconnect with people, right? Yes. And so it's been great having Amanda where she, in her first week, took calls with every single team member one-on-one to get to know them better, to know like, hey, what are some things that maybe they've never mentioned to me, but that's on their mind, that's on their heart, And so now all of a sudden...
I spilled a lot of dirt. I told her everything.
Now I've got a second pair of like ears and eyes, and not like in the big brother style, but more so like in an empathetic style where we can say like, hey, look, one team member is having issues, or one team member like maybe doesn't like the way we're approaching things, and now I can fix them because like I'm so like tunnel vision going 120 miles an hour. For sure, I've got somebody that still keeps everything else on track, and so that's awesome because we're gonna keep growing, and I think she's going to be a huge support on the hiring front too to help us find even more incredible talent because we've been really hand selecting. You came at a strong referral from somebody else in the industry. Amanda came at a strong referral from someone else in the industry. Of course. And so I want to continue that, and I think there's a unique time in the market because you have all these billion-dollar collapses. There are some incredible people we're probably going to hire over the next 12, 24 months from places like Genesis. Heck, people from FTX, as long as they weren't in the inner circle, there's some really smart people that worked there
absolutely.
that had no idea,
100%.
right? People that worked at Celsius, at BlockFi, at not 3 hours, I guess, but there's so many places, right? Or even maybe other competing funds that they had huge AUM drawdowns where now analysts are leaving. The point is there's a huge talent pool right now.
Agreed.
And we want to take advantage of that. And so Amanda was our next step in that. And now we're at 7, and I'm sure before the year's over, we'll be at 8, 9, 10, and we'll keep growing.
Yeah, I love that. Last thing, just on the quick announcements board, you're speaking at Hedge Week Digital Asset Summit in New York on March 2nd.
That's right. And I think you're speaking on the 28th?
I'm speaking on the 29th. Yeah,
that's right.
Hedge Week U.S. Leadership Summit. So
there we go.
What is your talk about again?
It's a fantastic question.
Don't got that.
The panel is a mix of, how capital raising is for digital assets in this environment. What's going on, and now that the dust has settled, what are institutions thinking? What are institutions saying? So it's a great panel. For example, one of the other panelists is Louis from 3iQ. Me and him talked back in the last bull market already about co-investing on deals and so forth. And so it's me, it's Louis,
Michelle.
Michelle is the organizer, right, and a couple others. And so it will be all about kind of like institutional digital assets, like what's the market thinking, where's the market going, what needs to change, and so forth.
It's going to be a great panel.
Yeah, up in New York.
I'm excited for that. All right, bring us home.
So with that, guys, it's been an amazing, I don't know the time, an hour, 2 hours. I hope you enjoyed the time with us. We covered everything from, my lessons running the firm for 5 years. And look, those were my first insights. I'm sure the next 5 years will teach me something completely new, maybe something completely opposite, maybe I'm completely off. Those are just my insights. But beyond that, I think macro can seem scary right now, particularly when it comes to crypto native regulation. I think a lot of people will say, oof, this asset is uninvestable. This is something I don't want to touch. Let the dust settle. And while I do think there's some truth to that, there is a lot of uncertainty, right? And who knows, some crypto projects, they might get completely wiped out by this. The ultimate truth is that I think this asset class is going nowhere, right? I mean, we are so far now where the asset class has proven itself. There is real world traction. There are real world use cases. There are very clear cut use cases that are by design more efficient than what we have in the traditional world. And so my perspective is the following, I might not be able to time the perfect bottom. I might not be able to know exactly which project will get hit by certain regulation. But I think on a net level, figuring out who's the most innovative and who's the most regulatory compliant or who's offshore, that combination of these kind of factors will enable us to find some of the core players that will be standing when the dust settles. And those that will be standing when the dust settles will benefit in major, major, major ways, because the asset class all combined right now is back down to like $1 trillion. For how big the industry has gotten, for how the fact that everybody knows about it, for the fact that there's millions of developers working on this asset class, for the fact that it's no longer just money, it's finance, it's gaming, it's collectibles, it's web infrastructure. There's so many angles, there's decentralized science, right? There's so many angles to digital assets. For those that have patience, I think this asset class will become a multi-trillion-dollar industry, and that's the game I'm playing. And so I'm here for the long term. My mental model is shifting from this very aggressive, long, short, finding winners, finding losers, to now I'm slowly shifting more into who are going to be the long-term winners, who will be here when the dust settles. And let's focus on playing long-term games. It might be volatile in the meantime, but there's really it's no longer about winning the battle. It's about winning the war. And so that's the kind of game we're playing. And with that, I hope you enjoyed today's session. We'll be here for another decade, not just 5 years. And so with that, thank you so much, and I'll see you next time. Take care.